While most individuals understand that Forex trading strategies are critical when navigating markets, they often overlook the importance of a Forex trading platform. These platforms have different functionality, latency, and charting that are critical to trading on margin. The Forex broker selected will set the trading platform options available, financial market, and features. Keep watching to learn how you can make the most of your available options. Selecting a broker. Before you do anything else, you want to make sure a Forex broker is regulated. Most regions have their own regulatory bodies, so look into your area's specific body to understand regulatory restrictions as well as guidelines. Most Forex brokers offer a demo account that can be upgraded to a live account and may require more detailed personal information and funding that exceeds the minimum balance requirement of the broker. So don't be afraid to get in there and try out a few different platforms. Choosing a platform. Speaking of platforms, you'll have three main platform options to view: charts, news, and make trades. These include MetaTrader, CTrader, and Proprietary. MetaTrader is the most widely used platform out there, so it's essential to learn it at some point, even if it isn't your first pick. Meanwhile, CTrader is tailored towards intermediate to expert traders and offers cloud-hosted solutions, pro analysis and charting, and extensive data access. Finally, most companies will offer a proprietary platform. These platforms often have unique features such as deal cancellation for easy markets, which is not available with MT4. Selecting a strategy. The first thing to look at with trading currency strategies is what is most commonly referred to as fundamental analysis. With fundamental analysis, traders analyze the market and measure currencies based on a variety of different fundamental factors. These factors are often much more calculated, while, as you'll hear later, technical analysis looks more at patterns and price movements. When an investor uses fundamental analysis, they look to the intrinsic value of a currency. On the opposite end of the spectrum of fundamental analysis, technical analysis looks at possible price movements in the future as a way to predict patterns that will result in financial gains. Those that rely on this type of investment have a variety of different types of graphs, and they're able to use this evidence that they have in order to make market predictions. The truth of the matter is that each person is going to have their own ideas for what is best for foreign exchange investing, and when it comes to trading and investing, there is no real right or wrong answer. It's just a matter of what each person thinks they might have more success using or have had success with in the past. There you have it, the 3 secrets to Forex success. Ready to find a broker? Then make sure to check out our site for tons of in-depth reviews and industry news. And if you enjoyed this video, be sure to like, comment, and subscribe.